Tim Moffatt here from Oakleigh Investment Management. I have in the presence of Akhil Patel.
Hi, Tim.
How are you?
Yeah, really good. Really good. Really good to chat to you.
We just thought it's nearly the middle of December, 9th of December, nearly heading into Christmas. Thought it would be the right time to do a quick final video update for while we were together before the year's out, the calendar year's end. Certainly been an interesting year. I mean, I think it probably always is, but it's been a good year for us in terms of the portfolio. Mm-hmm. We're up as of Friday. We're up around about 25% calendar year to date. The MSCI benchmark is up 22%, and the All Awards Index, the Australian market's up 11% year to date. So we've had certainly a very good year. This quarter in particular, we're up about 8% versus the MSCI up 3.5%, and the All Awards up 2%. So I mean, we've had a good number of stocks in the portfolio trending quite strongly this quarter. We've had 5 stocks up over 20% quarter to date. Obviously, Touchwood, IPX, GMD, Genesis, Realestate.com, Xero, and Capricorn Metals are all up over 20%. And then there's a handful of other stocks up 10%. So certainly been looking good in terms of positions in the portfolio that we've added to. We increased our stake in Xero around about 148. They've had a breakout effectively since then, had a good run. We initiated a position in ETP MAG, which is effectively physical silver. First little bit of direct precious metals exposure. We also started a small position in Firefly, which is a small or mid-sized high-grade copper developer. And we've also introduced a very short-term position in BBUS, which is effectively a hedge on our US exposure, because we've had such a strong run, just to try and hedge out some exposure for late November, early December, and some potential weakness that we thought could have unfolded given the strong run to date. So far, actually hasn't really done anything. Like it's gone sideways, but just there's a little bit of a focus on capital preservation here. Although broadly, the portfolio is certainly positioned for more strength in the markets. And I mean, really, we've spent the last couple of days discussing the path forward from 2024 into 2025, and it certainly has the possibility of being the strongest year this decade. Despite the fact we've had, I guess it's a pretty good year.
Been a pretty strong
year. Yeah.
Mm-hmm. Yeah, I mean, I just say that the insurance that we've put on towards the end of the year, I think it's quite sensible. Markets have had a strong few months, and at some point there may well be a little bit of a correction, and so we potentially benefit from some of that as well. But yeah, no, more broadly into 2025, we're sort of historically at the midpoint of the decade, the 5th year. And if you go back over the history of US markets, and we talk about the US because we have the data for that, but it's pretty similar in other markets for which we have slightly shorter term data. But if you go back over 120, 140 years, the 5th year is often the strongest year of the decade. It's kind of a cyclical pattern that applies to the stock market. Some people know about it, not many people do. We factor it into some of our analysis as well. And so we're approaching that part of the decade now, and markets are running strongly into it. So you would expect that would continue. And then the more important thing from my point of view is that we are approaching the peak of the 18.6 year real estate cycle, which is, of course, one of the guiding principles for the portfolio. And the final couple of years into the peak tend to be very strong years in the stock market because there's a lot of economic activity. Companies generally are, it's not across the board, but companies in very significant sectors are expanding earnings, and that's obviously reflected in strong stock price growth. There's a lot of spending, there's a lot of credit creation, people are borrowing a lot of money. That's sort of, then if some of them are spending, some of them are investing and so on. That's good for markets. And I think we've seen the signs of quite an overheated economy. And I mean that in the sense of things are really starting to get quite speculative and quite interesting, and that's been reflected in things like the price of Bitcoin and the stock market at all-time highs in a number of different countries. And so I think that's the outlook for the next 12 months, in my view. And I'm glad that we're positioned to take advantage of it if that happens in the portfolio.
Yeah. I mean, look, obviously there's no guarantees in anything.
Of course. Yeah.
And we're certainly mindful of watching for any indication that that's not going to play out. But for the moment, the portfolio is certainly positioned, fully invested. I suspect if we don't see any sort of pullback in the market in due date, the hedge position will be replaced with basically stocks that are breaking out and can continue to benefit if the market keeps running into 2025. So, look, if we know there's a number of investors who have been watching us and are already in the portfolio. If you are considering and looking to add to your market exposure broadly, I think now is still a pretty good time to be considering it. If you're a potential new investor, please reach out. You can find us on our website, oakleighfs.com, or just send us an email, invest@oakleighm.com, and someone will be in contact. Merry Christmas. Have a good holiday break. I'm not sure.
Merry Christmas, and hoping for a really positive 2025.
Continue the momentum.
Indeed.
Yeah, well done.